One thing that most new property investors are concerned about is how on earth do you find a deal and then analyse it and understand that it's going to be a good deal or a bad deal. And that's what we're going to talk about today. We're going to go through a live valuation and assessment of a property.
My name's Alice Potter and this is Steve Potter, and welcome to the Property Legacy podcast. And this episode's a little bit different today, so if you are listening to audio, there will be a section towards the back end of this that we would prefer you to watch on YouTube, just so you can see visually the deal breakdown. But the majority of this episode you can listen to on audio as well. So if you're in the car listening to us, if you're on a walk with us in your ears, don't worry, you can tune into this whole episode. But if you do want to have a look at the deal that we do, a live deal sourcing, a live deal breakdown, then make sure to jump onto YouTube at a more convenient time just to watch that section of this episode. So, deal analysis, what do you need to know?
So, the information we need is obviously when you're looking at Rightmove or any deal that somebody talks about, they'll tell you how much the purchase price is, they'll tell you where it is, the size of the rooms, how many bedrooms, that kind of stuff. But from your point of view, do you actually know whether that value they're asking for is market value, below value, or completely above value? So all these kind of things is we need to be able to understand how to quantify the actual asking price first, then look at how much a property would get income-wise. So if say it's a buy-to-let, how much per month it'll bring in, and then do some calculations to see whether it's going to make you a profit, whether it's going to be not profitable as a buy-to-let, or whether it'll work as a flip or any other strategy. So this is where you need to do this on a regular basis so you get used to the sums and used to identifying properties that are ideal for your strategy.
And on average, how long would you say as a beginner it takes to assess a deal?
So your first deal is going to be a little bit of a hit and miss. It's going to take you 10 to 20 minutes to go through it all. But the more you do it, the more repetitions you have, the easier it is, and you can easily tell where's good, where's bad. But from your point of view, if you're doing property at the very beginning, then I would look to do analysis on at least 20 to 30 properties, all from different postcodes from your area, so that where in your area buy-to-lets work really well, where flips would work, and where an HMO is allowed or service accommodation is allowed, and all these kind of things you would then utilize every time you do an analysis of a deal. Does it work for this strategy? Does it work for that strategy? And then, worst case scenario, does it just work as a buy-to-let?
And as a beginner, do you think that it's easy to do on your own, or would you say that you need a little bit of guidance?
I think having guidance is always going to be a good thing. Having somebody to just check your analysis and check your sums, and having a spreadsheet even just to put everything down so that every little bit is covered. Because what a lot of people forget is all the different costs that come into a property a month, all the different issues. Are you going to use an agent to rent the property out for you, or are you going to do it yourself? Your cost each year for your gas certificate, your cost every 5 years for your electric. So there's all these things that can take away your profit. So if your profit is really slim on the first look at it, then it's not going to be worth looking at. And you need to understand what you're looking for. For instance, when we do gross yields, which is a very straightforward sum, where you take the full amount of income from rent for the year, divide it by the purchase price, times it by 100, and that gives you a percentage. Now, if you're in the Northwest, I wouldn't look at anything below an 8 or a 9%. But then if you're in London, you'd be looking at 3 and 4 and 5%. So it just depends on where you are and what you're happy going with. But personally, I wouldn't go for anything below an 8.
And when you're working out whether a deal is good, is there a difference between whether or not you're going to be purchasing that house as a buy-to-let, or whether you're going to be purchasing it in a different strategy?
So buy-to-lets is more about buying a property low cost, maybe adding value to it, and then getting a decent return on your investment month in, month out, and it's long term. Whereas a flip, you're still looking to get properties as cheap as possible, but you don't want a property like a buy-to-let that has a ceiling to the price, so you can't really, even if you put in a £20,000 kitchen, it's never going to increase it by £20,000 or £30,000 because that area has a ceiling point. Some areas, so say you're in Liverpool and you're looking at Toxteth area, which would be good for buy-to-lets, but the top end of the market, you'd go to a different area of Liverpool where it's a market and a bit more properties where you find properties that still need stuff doing to them, but then other properties in the same street are selling for even £100,000 more. So it works better in some areas than others. And what we would always say is to analyse properties for multiple strategies so that you don't miss something.
So today we're going to do a live breakdown of a deal. And as we said previously, if you are listening to us, and this is the point where we would say to have a look at how long we've been talking for and just jump onto YouTube to have a little watch as we break this down. But as always, if you do find that you have any questions or anything whilst we're speaking, if you've got any questions to do with deal analysis or anything else property related, make sure to leave it in the comments below. We're always here to help and create content and podcast episodes that help you out with any issues that you might be having. So, without further ado, let's get into this deal analysis.
So here we are with the area we're going to be concentrating on today. So my area is the Blackpool area, FY postcodes 1 to 8. So you can look at postcodes in maps like this from a website for anywhere in the UK, and you can easily identify where those postcodes are, easily link up what does FY8 mean, it's Lytham St Anne's, that type of thing. And then what I do from there, next step is I go and have a look and analyse the actual areas. So FY1 prices for one bedroom properties averaging about 62,000. Some are as low as 55,000, but so it's cheap and cheerful in this area. 2 beds 60,000, 3 beds 85, 4 beds 80. Because for some reason there's some 4 beds and 80 and 3 beds don't start until 85. It's a bit strange, but it gives us a bit more information about that area. We can then look at rents, what to expect. So 4 and 5 bed, the reason why they're not there's not enough on the market. So that tells me that if I get a 3 bed and turn it into a 4 bed, it'll stand out because there's not many in the market to be up against. Or 4 to 5. So we'll have a look for those kind of things in a minute. But 850 average for a 3 bedroom property that you'd buy for 80 grand, it's decent returns. 650 for a 2 bed, I'd say 700-ish, in this area more than likely, but still good rates. £500 for a 1 bed, and these are quite straightforward. You'd get through FY1 and then increase in all the other areas. So it's great at that. Growth, obviously we had a dip in 2019. It's been on the rise, another dip 2024, and now we're starting to see another rise again. So it's all going in the right direction. Yes, we had a dip here, but overall it's going up. It's not a huge amount, but it is growing. We're seeing these kind of returns increases over the years. So we've had some dips, but it's doing well. So what else can we have a look at? Stock. So stock's quite interesting because it tells us, if it decides to actually come up, it tells us what types of properties are common. So a number of bedrooms are usually 3 beds, and you see here 4 and 5 are few and far between. There's not that many. It's mainly 2s and 3s and 1 beds in the FY1 area. Square footage, usually averaging out, it's quite small area, property sizes, mainly terrace properties. If you've ever been around Blackpool, not on a prom, you'd see that most places are terrace properties, which are great. Obviously, flat conversions, semi-detached, they're all good to be looking at. Purpose-built flats, there's quite a few, especially for the retirement population. Energy scores, mostly around Ds. Now, if you're thinking about it, ECs around Ds need to improve at some point over the next few years, but a lot of these properties are over 100 years old and you'd struggle getting them up to a C, especially as regulations keep changing and the regulations have changed, so it means that a C now will probably be a D next year. So we've got to keep that in mind. Demographics. So yeah, a deprived area in Blackpool. You can tell by the state of the properties, and that's why we're trying to promote bringing investors to the area to improve these properties up to better standards. And that way we can get the area, the community, and everybody going in the right direction as the council and big business are investing a lot of money in the area. So it gives us all this kind of information. So what does that help us do? Well, if we're going to go and look for properties for sale, FY1, that's the area you're interested in. Look at that. This area only 60,000 to 100,000. 2 to 5. We want a house. And then we go to filters and we want to get rid, do not show auction property. So now we've got lots of properties on there. So what we want to do, I always prefer to look at the lowest first, which then helps. Now, you see here, we've got price change history, and you're possibly wondering, where's that from? Because I don't get that when I look at Rightmove. Well, up here, I've got an extension on the Chrome software, and that allows that information to be posted here on whenever we're looking at properties on Rightmove. I also have a different one called property data that will help me analyze deals. So, got offers over 65 grand. It's a 2-bedroom terrace. That's okay. Offers over 65 again. 2-bedroom terrace. 69,950. Still too bad. 2-bed terrace on Beardshaw. 69,950. But here there's a 4-bed. 69,950. And it's the initial asking price. Been on for a month. So let's have a look at that. So first of all, yes, we have the floor plan. We only have one picture though, so we can't see what the property's like inside. So we're going to have to view it if we're interested. As you can see here, property data's popped up. It's telling me the average square foot price sold price is 71 square foot. The asking price is £114 per square foot. So there's a little bit of difference. Average 4-bed asking price is 112. So this is at 69,950 and the average asking price is 112. So there's a nice chunk there to be interested in. No chain. Terrace house, 4-bedroom plus loft room, 2 receptions, so room to expand. With a floor plan, so we've got a lounge, dining room, kitchen, bathroom, and downstairs toilet. So not everybody likes that, but in this scenario, it's good. On the first floor, we've got 1, 2, 3, 4 bedrooms, an upstairs toilet, and then there's a loft room as well. Now they've classed it as a bedroom there, but they only say it's a 4-bed house, so we'd have to look at how the building regs have been left there, but it's possible that it could be turned into an official bedroom, and then it'd be a 5-bed, or you could turn the lounge into a 5th bedroom and be a 5-bed that way. So all options, always look to see how you can add value without actually doing a hell of a lot. That's really good. So we go back. So this is giving us all the good information. Let's see if we analyze the figures. So if we go and have a look, buying it's a buy-to-let. So 69,950, mortgage of 52,000, deposit would be 17,488 at 25% deposit. Purchase costs, that includes survey costs, solicitors' fees, and mortgage arrangement fees. Stamp duty, that's at 5%, and so the total money in is less than 22,500. The rent for a 4-bed in Blackpool in FY1 would be £950 monthly. The mortgage cost at 5% mortgage, depending on, change that depending on what your mortgage would be. That we have a net income of 8,777. Now, that's once it's renovated, so we'd have to look at that. But once renovated, about 16% yield, which is amazing. Investment, because you're only putting in 22,485, means you get 39,000 year 1, 50,000 year 2 and onwards. 50%, sorry, 39%, 50%. And if you did nothing else but just keep the money, you have all that 22,000 paid out in your hand within 2.5 years. So that sounds really good. Now, if we wanted to refinance, take money out, this is the same as the first, what we already looked at. But if you're going to put a £15,000 and we get, because the average asking price, you remember, is 112,000. So if we can make it better and the fifth bedroom get to 120,000, we pay the original mortgage off, and it ends up giving us back more money than we put in. That sound good? That sounds really good. $9.50 a month. Mortgage cost goes up because obviously we've now remortgaged it at a higher value. Net income comes down, but that's free cash because you've not got any money held in the property. Your yield is 10% and your ROI is off the scale because you've got no money left in the deal. So if we managed to refinance at 130, then we would actually get 30 grand out of it, reinvest in your next property, and you'd still have 6,525 a year coming in without any of your money in it. So that's really good. So from the figures point of view, that's amazing. Okay, you'd be no money down after the renovation and refinance, and no money down after the renovation and finance. Amazing. So if I bring back the property, now let's just see what we think the value is. So using property data, we can check the valuation. So we've got its house, pre-1914. Have a look up on this. Did we have a house number? No. Right. So we'll have to go with it. We'll go with this one. It's 4 bedrooms, 2 bathrooms. It's unmodernised. It'll have a yard, so we'll do balcony, no off-street. So it gives us a calculation, and it's saying 55 to 65,000. So it's slightly above market value, but you could try and knock them down a little bit. It's something to look at because this is what prices the stuff has been sold in the last 12 months to 2024. About 80,000, 75, 63, 60. Yeah. So it's roughly about the same. It's not gone up or down much. That's not too bad. The average in the area is 110. Up for sale today, comparables, they're all 69, which is what we're on there, and above. Everything else is above. So it's the cheapest 4-bedroom house in FY1. So that's given us a lot of good information. So we're very happy with that. So from a quick look on the system on Rightmove and looking at is available and looking at this particular deal, this one stacks up and should fly out the door. Only issue is there's no photographs other than that one. We'd have to have a look inside and look at to see how much it needs spending on it to bring it up to a rentable standard. But effectively, you could spend 15 grand on this and it'd be worth 120 all day long. That's how you analyse a deal in quite straightforward steps. And I hope this helped you find deals in your area. Thanks. There we have it. We've been able to look at this buy-to-let property deal. Means it's going to have gross yield of around about 12 to 13%, and then return on investment is going to be 20% this particular deal. The good thing is it's something that you can go through step by step for all deals, especially buy-to-lets. Spreadsheets we use are available through our free membership. So if you go into the links below, you'll be able to see a link to our free membership, and you can go there. You get a free course, you get all the documents that we looked at today, you can then download them and use them yourself.
Thank you so much for tuning in to this episode of the Property Legacy podcast. If you want to connect with us, we are on Facebook, Instagram, TikTok and YouTube, and you can listen to us on Apple Podcasts, Spotify and on YouTube as well. If you need anything from us, feel free to pop anything in the comments and come and connect with us at propertylegacypodcast.com to have a full browse of our range of resources and services that we also offer. Thank you so much for listening, and we will be back with you again soon.